you for mentioning that. I didn't start the recording, so just for everybody listening here to the recording, I didn't start it from the beginning, so you missed a minor portion of the webinar. But thank you for mentioning that, because believe it or not, I didn't have it recorded. Okay, wow, thanks. Anyway, so for me personally to look at this as being a top, well, there'd be a couple of things we'd want to look at. All right, number one, I'd want to see a close at least below the low of the high bar on a weekly basis. All right, and I'll show you the shorter term view, later. But as you can see, we're really continuing to hold support. Okay, so at the very least, I'd want to see a close below that low, and certainly a close below, of course, the upper band. Now, we look here now, we did, well, if you look at it, we hit 2,399. 2301.56 is the upper band. So we literally came within a point of that upper band. And as you know, the market's been kind of struggling to try to hold that level. Now, if you look on the Dow, okay, the Dow is about 100 points underneath the upper band. It did take out the 20,000 level, but, it's been struggling to hold that 20,000 price line, okay, which 20,000 would, if it could close above that, obviously, that would mean it's closing above the upper band. Now, here's the NASDAQ Composite. This is actually the only market that is trading above the upper band. Okay, 55.95 is the upper band level. Okay, we closed out January at 56.42. Okay, or actually yesterday we closed at 56.42. So you can see we're about roughly 50, 60 points above the upper band. Now, again, another indication for us, if truly a bear market is coming, would be to see the NASDAQ close underneath the low, actually close below that upper band level. And then here's light gray. This is the actual commodity price on oil, okay? And again, I'm bringing this up because the mid band is 54.67. And you can see it peaked at 55.24, closed yesterday at 53.88. So as you can see, it's within $1 of that mid band. Now, again, what's concerning here is, or disconcerting is, if we can't get a close above that mid band, then I would expect a retest of that low, and it would probably run back down to 26. So this is a price level that we need to really be mindful of. And then here's the 10-year Treasury. This is the 10-year Treasury yield, okay? And this is kind of an interesting chart because you can, as you know, we've been spiking up recently in interest rates. But if we look at this monthly chart, you can see that it's still well in a downtrend, okay? Got as high as 260. Did take out that prior pivot high, by the way. So this is kind of an interesting chart formation because I do believe that you're going to see rates go back down, all right? And then here's gold. So again, gold had been severely, I would say, unsustainably strong vis-a-vis the fact that when it finally did break out, it ran above the upper band for quite a while and a number of years. I mean, you can see that from the point of breakout, which was back in 2005, it ran about 7 years above the upper band. All right. Now, my belief is that gold ultimately tests the mid-band, which is 773. I don't know if we're going to get down that low, but what I'm thinking at this point is we probably do go lower. And again, as you can see from this chart, the money flow has really been negative. It's been negative since 2014, all right? And, what's happening now is a lot of people are getting bullish on gold, which leads me to believe that we probably will head lower. And then here's copper. And I bring this up because, as you know, the metals have been running. All right, U.S. Steel is up quite a bit today. FCX seems to be holding its value, which is kind of interesting. And one of the reasons being that, you know, we look at copper. Copper came down and stalled right on the mid-band. Okay. So based on this, I would expect perhaps a run back up to the upper band. But again, you know, again, with this chart, what's kind of interesting about this is we had the breakout, okay, or busted out above the upper band, came back within it, stopped at the mid-band, came back up and had, in essence, the retest and came back right again to the mid-band. So this has been kind of a routine pattern for copper. All right, by the way, any questions on these longer-term charts before I move on to the shorter-term view? All right, good now. But, you know, I do, like I said, I just want, I want everybody to be mindful of these critical long-term levels, okay? Because as you can see, you know, we're literally sitting right at strategic levels, okay? Now here we get into the short-term view. This is the S&P 500 60-minute chart. Excuse me. And what's kind of interesting is that 2281 level has been really kind of acting as a magnet, all right? You know, we broke above it. We actually, I think, had one day that closed above the next confirmed. And then now we've come down and we've been bouncing. By the way, 2273 is this line. I didn't put it in here, but that's the confirming line down, all right, to 2250. And what's kind of interesting is, you know, it's kind of gotten below that 2273, and every day it's managed to close above it. So if you look at a daily close basis, we haven't had two closes underneath 2273. Market gets underneath it and it recoups. Came back up, bounced off 2281 again here. Actually, it hit it within a penny. Took it out the other day. And now today, I think we're kind of bouncing around that 2281 level again. So, you know, my feeling is the low for the week is in, okay? And I say that for a few reasons. The one major reason being that I believe that 2267 level came exactly to the 76% retracement level on the weekly bar from last week. So I'm at this point, I'm under the logic that I don't believe 2267 was taken out. All right. Now, tomorrow we have non-farm payroll, so this is going to be very interesting to see if the market gains some traction and some legs. But here's the VIX. I mean, the VIX has just been really bouncing between 1250 and 1094, which are the two closest major levels. And interestingly enough, you know, it gets above 1250, did it twice, and then pulls right back to under 1250. So, I mean, on a short-term basis, every time it reverses and closes back, you know, you can scalp some profits out of the markets. Here's the Qs on the 60-minute. Now, again, the Qs are the strongest of all these markets, okay? And it continues to be in a strong uptrend. All right. Actually, we hit the 125 objective, actually came up and hit the next upside confirming line, which is that 125.78, and that's where it pulled back from. And again, where did it stop? Right at the next downside confirming line, which is 124.22. And then yesterday, I believe it did close above 125 again. So today, I'd have to look at, we'll look at it after I close this down, but it's probably bouncing between 125 and 125.78, and certainly Apple helped the Qs yesterday with their earnings. But here's the diamonds, you know, again, 196.88, the confirming line down? I'm sorry, is the support line down? 200 was the next upside major level, which of course was exceeded. And then the market pulled back. Now, what's kind of interesting about this is the next upside level would have been roughly 199.80-ish area, okay? And what's kind of interesting about this is that's where the market stalled and pulled back. And again, where did it come and stop at? This support line, 197.66. So again, kind of trading between well-defined support levels. TLT, 121.88 is the upside line. Downside line is 118.75. And then it stalled yesterday roughly around that 119.53 line. Actually, that was exactly the high yesterday. But 118.75 has been fairly strong support. So for the rates to head up, okay, and the TLT to head down, it would have to break under 118.75. And then here, GDX stopped. GDX stopped right at the 25 level yesterday. Actually fell short about, 60 cents, 7 cents. But these are the closest support resistance levels, 23.44, 25, of course, on the upside, and on the downside, 21.88. Now, 25 to me should be strong resistance, and I don't think today it got through it. So it'll be interesting to see if that holds as resistance. The XLE, now again, here's the major situation right now. We are literally approaching that major 71.88 line. And my belief is that should be support. But the significance of that level is simply this. If the XLE does close under that line for 2 days, I would expect to drop all the way down to 62. So this is going to be very interesting to see if this holds as support, because I think if it does, we're going to have a nice run-up in some of these oil stocks. Okay, and then here's earnings. Yeah, I showed a chart here of Apple because, of course, Apple gapped up yesterday off their earnings and had a really nice move, and made new all-time highs, et cetera, et cetera. So Apple just kind of continues to tick up, and then here's a 10-minute view. Okay, so again, what's happened here? It drifted up. Okay. And late in the day yesterday, it did finally close underneath the upper band. So I would expect that upper band to be resistance. And as we know, we have our targets to the downside, which would be 50% of the gap. First is the low of the gap bar, 50% level, and then a gap fill. But I think what this ultimately does create an opportunity on the long side for Apple. This was an interesting stock, this Citrix. And I don't think I had it on the list. But it was interesting. I looked at this yesterday. It had gapped up off their earnings. You can see it here on the 10. And to me, this was a really interesting trade because it gapped up. Okay, you can see the 10 is obviously in a downtrend. All right. Hit 75 and proceeded to drop about $5 straight down in about, an hour and a half. So this was just a beautiful short side trade. And then I said, okay, late in the day, I'm looking at the chart, and I said, okay, this thing's going to reverse. Had a really strong reversal bar late in the day. And we'll look at it live when I close this down. But kind of an interesting setup on Citrix. And, of course, again, the logic dictates that, it should drop, okay, because the 10 was in a downtrend, okay. We had a nice downward sloping trend. And then late yesterday, as I said, it bottomed, okay. The 30 had just crossed out, okay, so it was still somewhat, showing a lot of strength. And we'll look at Citrus in a moment. We'll look at a couple other ones in a moment. But anyway, if there's any questions, shoot them through. Then I'm going to close this down. I'll close it down, and then we'll look at some live charts. All right, good. What the heck? Oh boy, that was kind of weird. All right, let's see here. Okay. All right, I got my toolbar back. Now, this is Citrix today. And again, I thought this was just an incredible setup for the short side and then the reversal to the long side. And look at this. This stock made a $5 move. This is why I got to tell you, I love earnings. And again, I don't particularly like them from the standpoint of trading pre-earnings, but you can see these reactions off of earnings. You know, here it is, it gapped up yesterday, hit 75, sold off $5, had the late day reversal, and now it's up over $5.50. So in 2 days, this thing had a $10 move roughly on a $75 stock. Just an incredible opportunity if you're trading short term. Let's look at Apple. Okay, now Apple is doing the slow grind down here off the overbought condition. All right, I want to look at a 30-minute chart. Okay, so the low is 127. So Apple's right now sitting at a pivot low of 127.79. So still about 80 cents away from the low of the pivot bar. Okay, and interestingly enough, on the 30, it's still not underneath the low. I'm sorry, it's still not under the upper band. All right, so right here, if you had speculated on the short side, I'd be closing any short and looking for a possible reversal to the upside with the 127.50 acting as support. And quite frankly, if that's the scenario, then most likely it'll run back up and try to test this upper band again. So again, this creates some opportunity. Cruise reported, oh boy, and they gapped down. They're down 14% off earnings, which is very interesting because Cruise is a supplier of Apple, okay? And here's Apple heading up and Cruise is going down. So again, underneath the lower band, and here it is on the 30. 30 is in an uptrend. So quite frankly, this should be this should snap back, all right? So this is definitely one you want to kind of take a look at. The other one that reported was Facebook. That was the other biggie. Now look at Facebook, downtrend, got above the upper band, came back down to the mid band. Let's look at the 30. Okay, 30 is in an uptrend. 10 was in a downtrend. So, you know, if you want to think about it, this is a, you know, this particular pattern where it got above the upper band with the 10 in a downtrend, logic would tell you that most likely it would pull back. Right now, it's right literally at the mid band. So again, this should probably snap back up. And what you'd want to see here is if the 10 can cross into an uptrend. And there was one other that reported today that had a big move. I think it was Edwards. Okay, here's Edwards. They're down about 10%. See what the 30 looks like. Okay, 30 is in a downtrend, okay, well underneath the 30 lower, well underneath the 10-minute lower. Now, quite frankly, I think the only saving grace here is the fact that it hasn't closed below the low of that spike. So it's possible this thing could bounce. Huh, interesting. Yeah, let me put it up. Let's take a look at a 3-minute chart on Facebook. The comment was, you know, I wonder what this spike on the 10 looks like on a lower time frame. And we can see on the lower time frame what it looked like. This is a 3-minute chart. And again, this is kind of interesting because look, Facebook Open stopped right at the mid band on the 3, bounced up to over the upper band, then it had that little long tail spike above it, and then came right back to the mid band here. So theoretically, that price level there of 130, 160 should be fairly strong support for Facebook. But talk about some rapid moves. I mean, this thing jumped up about $4. From the peak at 135.50, it's down about $4 there on that swing down. So this is that was some really nice movement on a low on Facebook. I think Citrix kind of takes the cake right now. Ralph Lauren also reported well underneath the lower band and underneath the lower band on the 30. And I saw some news on this. They actually had a beat, by the way, but I think they got hurt by, I think the CEO announced he was stepping down, which I think kind of added fuel to the fire on Ralph Lauren. All right, so right now it's sitting just under the lower band on the 1 hour. That's what it looks like on the daily. All right, wow. So look at this. On the daily, it came back to just under the lower band. 77.71 is the lower band. So this is kind of an interesting stock, okay, because we've got all time frames underneath the lower band. All right, which quite frankly should tell us it should bounce. All right. Lower band here is 77.71. It's at 77.20, so it's a half a buck underneath the lower band. Now, let's see if there's a clear-cut way to enter this thing. All right. Here we are on a 3-minute chart. Okay, we've got a pivot at 76.86. So literally, if you went long here, okay, it's right now trading at 77.28. So you've got about a 40-cent risk because you know if it closed underneath this low, you would probably want to close it. Yeah, right. See, good point. The CMF just turned positive. And we're getting a huge volume spike. You can't really see it here. Let me separate this. Okay, look at that spike and compare that to any other day. I mean, this is basically having a selling climax right here. And a huge one, I may say. But, you know, in terms of trading these things, you know, if you scale down to smaller time frames, you know, you can catch like on this one. We can catch like a little pivot low where we say, okay, you know, if Ralph Lauren is going to bounce up from here, the odds favor it not breaking that pivot low. So that's where you can kind of get really low risk entries. you know, because somebody pointed out to me this SSW today. Okay, I'm going to show this on a, and you know, I was prepping. Chris brought this up today, by the way, Andrew, on Skype. And I said, well, this thing should bounce. You know, and we know that because, look, it was well underneath the lower band, all right, on the 10. And look at this on the 30. And I believe on the 60. All right. Underneath the lower band on all time frames, it literally stopped just about on the lower band on the daily. 674 is the lower band. 662 is today's low. So again, if you go and scale down to like a 3, okay, you can see here where you had the little pivot low here at 665, one at 662, and then right in this area, it closed back inside the lower band, which is about 675. So if you look at this, 675 to 750, that's a what, a 50 cents, 75 cents. That's over a 10% return by noon. Now, I didn't trade it because I was prepping for the webinar, so I was kind of, I wasn't really following it that closely. He just brought it up to me, this particular gentleman. But damn, if you jumped in on this, even if you had 300 shares, you know, that's a quick, you know, $250 profit or something. And again, I don't even know if they have options, but, you know, if you think about options, you know, and the leverage of options, you probably, you know, would have significantly multiplied that. Let's take a look here. Yeah, by the way, the groundhog saw his shadow, so we've got another, what is it, 5 weeks of winter? That seems to be the news of the day. I'm starting to feel like Bill Murray in Groundhog Day. Okay, and they do have options. Okay, so let's take a look here. Pivot low here was 670. So let's look at the $7 call. This they don't have a 7. Oh, geez. But let's look at the 750. These are only monthlies. Okay, so today's range has been 14 cents to 40. Now, remember, this is the call that would have been about a half a buck out of the money. So I'm just going to speculate and say that if there was a 7, the 7 might have gone to around 90 cents, maybe $1, but it probably would have cost about 30 cents. But still, if you think about that, okay, that's a stupendous return. And even if you paid, take a look at the daily here. This is why to me, these bands become so wonderful. Yeah, I'm not getting any data here. But if we rely on what Yahoo says here, you know, the low for the day was, what, 14 cents, and ran up to a high of 40. Right now, it's trading at, they got a 35-40 bid-ask spread. So that's kind of interesting. But what's kind of interesting, and I think the interesting aspect of all this, is that these extreme bands, you know, again, can kind of help you pinpoint a low risk entry. And it certainly did here, okay? Now let's look at Facebook again, see if that's bouncing. All right, now look, Facebook broke. So now it broke under the mid-band. Okay, still trying to hold the mid-band here on the 10. So right now it's 131.57, 131.49 is the mid-band. So it's literally within 10 cents of that level. And as you can see, it's getting slightly oversold. So this is a stock right now. I mean, here's the scenario. If Facebook breaks under the mid-band on the 10, I would fully expect this thing to continue down. So, you know, here's the thing. You don't have to be a gambler with this. You know, you can kind of just sit and wait and say, all right, well, let's see if, you know, let's see what scenario unfolds, and then just trade the scenario. By the way, we've got a couple of big ones reporting tonight, so this could be very interesting for tomorrow. We've got Amazon reporting, we've got CMG reporting, and then this data, which is it's kind of a stock to me that has the potential for having a big move. Amazon's up today. Okay, and CMG is the other one. You know, it's interesting because I remember, wow, look at CMG. It's up about $5. CMG to me is the one that could be a very interesting setup for tomorrow. Yeah, and you know, if we look, by the way, if we look at the S&P, let's take a look at the S&P. Okay, today we've got an 11-point range. Still trying to hold that 2281 level. All right, so this could be a situation where if we have a contraction tomorrow could be a fairly big day in the markets. But you know what's interesting, and I said this before, and I think we talked about this specifically about Skyworks. And I said, one of the things I've been looking at here is this. If this ADX line has been really low prior to earnings, it seems that a lot of times these stocks do have a tremendous pop. And I remember on one of the webinars, I talked about that this was the setup on Skyworks. And you can see, look at this, it's about 11, 9, 9. And look at how long this thing had been under the 20 level for a couple of months. And then, you know, once it reported, and if you look in here, maybe at this day, this was about $78, ran from 78 up to a high of 94.50 after the earnings. But I'm finding that to be a compelling reason to consider maybe perhaps a trade before earnings. And if there's a chart you want to pull off and look at, I think it's Skyworks, because that's the setup that seems to indicate that there's going to be a rapid and accelerated move on earnings and perhaps after earnings. I wouldn't be trading Skyworks now. Look where it is. It's well above the upper band. And the upper band is 89.85. So it's interesting to see if the upper band will hold here. If it does, then Skyworks should continue up. If it doesn't, as you know, it'll pull back to within side. I think Netflix. Okay. Netflix is similar to that right now. Look at where Netflix is. Got above the upper band, and now it's trading just under it. Kind of flatlining here. You know, this is a stock I would not be inclined to be thinking about on a long side trade, only because of where it's sitting on on the, unless it was able to break through the upper band again. Okay. This SSW does kind of tick me off because this was a really quick, nimble profit in there. Okay, any questions? My voice is kind of going. I don't know why. Okay. Well, look, I don't see any questions, so I'm probably going to close down, get myself some water here to clear my throat. But again, I want to thank you for being here. And we'll see. By the way, FireEye, if anybody is in FireEye trade, okay, let's take a look at FireEye. Okay, it's 1321. You should be short the 14. Okay, and they do report tonight after the close. So this will be very interesting to see what happens with FireEye. Because it looks to me like the market makers are projecting a decent move. Okay, slight upward bias today, not much. But it looks like it's been kind of retracting after before earnings. So we'll see. I mean, obviously to me the best scenario is this thing moves up and stops right at 14. And we've got the upper band here at 1357. Let me see here. On the 60, it's 14. All right, so to me, it would be great if this thing did bounce up off earnings, come back and close underneath the upper band. Those calls expire worthless, and we can roll out for another week. And that's the scenario I'd be looking to do on FireEye. Okay. Anyway, listen, thank you for being here, and we'll convene again in 2 weeks. Hey, everybody enjoy the Super Bowl. Hey, type in who you like in the big game on Sunday. No, the Packers didn't make it. That's funny. I was rooting for the Giants, but of course they lost to the Packers. So anyway, listen, everybody enjoy the weekend, enjoy the game, and we'll look for the earnings tomorrow on FireEye, and everybody have a great rest of the week. Thank you.